time, I have it to be 11:05, and I'd like to use this opportunity to just briefly give an introduction to our facilitator that will be taking us on this session today. And I would like everyone to know that we are all in safe hands. Once I state out all the skills, set the experience, the qualification of our facilitator, you will understand that this is going to be not only an interactive session, but a knowledge gaining session also. So I'd like to confirm that everyone can see my screen shared on their devices that they're using. In order to confirm that, you guys can just on the chat box, just kindly click yes. If you know that you can actually see my screen and you can hear me clearly, just click yes so that I know that yes, so I'm not speaking to myself only. Yes, thank you. I don't care. Once again, Yudi, thank you so much. Yeah, let's drop in there. Let's drop in the chat. Thank you, TS. Keep going. I want to see how many people that are actually available and that can actually hear my voice and are currently here with us. Thank you, David. Thank you, David, so much. Welcome. Once again, let's go. Uloma, thank you. Oh, Sule, Emmanuel, thank you so much for joining us. Come on, I know that we have like about 20. Hold on, let me check first. Yes, we have about 15. So I'm praying that it's just like about 15 yeses. Is that correct? Sorry, 15 years. So sorry about that. Okay. Thank you so much, everyone. Thank you, Olumide. Thank you. Good. It's good that I can hear everyone. I know that today is an unofficial day. That said we should just put on our cameras and just wave to each other. But I don't want a scenario whereby we're not in the right area or we're not in the noisy area. But as far as we can all hear each other and we can actually see my screen, I think that's good enough. Thank you so much. So moving on to the next page, I will just be sharing this. Okay. All right, so I'll be doing a brief introduction of our facilitator today. Our facilitator is Aderonke Oloruntoye. Qualifications, she has a DXC in accounting from the University of Ilorin, Kwara State. She's also a fellow of the Institute of Chartered Accountants of Nigeria, which is ICAN. She's also part of the Chartered Institution of Taxation of Nigeria, which is CITN, and also a member of the Nigerian Institute of Management. She's also chartered, which is the NIM. Now, going straight down to our experience, Mrs. Aderonke now, she currently runs the firm called Faso Detail Consulting. She's the chief consultant of FDTT. And period to that, or before she decided to start up this, she had previously worked in Rasta Limited as the senior associate in finance management team. She has also worked in Deloitte Nigeria, which is part of the Big Four that we know, as a tax consultant. And in between the period she worked in Deloitte, she worked in different business. She worked on different businesses that we're talking about local businesses and international businesses in giving out consultation in terms of their taxes. And she was also the head of the tax unit for Cell Capital, which is a SAO as a chartered accountant firm, and she also worked at PKF Professional Services as the head of tax compliance and advisory service unit. PKF Professional Services is like an audit firm. They also offer consultancy services. And after that, she also worked and served as the chairman of the Lagos District Society of the Chartered Institute of Taxation of Nigeria, that's CITN, between the period of 2014 to 2016. Now, her skill set ranges from quality control, operational excellence. She's good and excellent in service delivery, relationship management, also project implementation and management. She also has the ability to work in a corporate capacity improvement, develop existing businesses, and facilitate development for new markets for firms. Now, Aderonke has been offering tax compliance, tax consulting, and tax advisory among services. She has attended and delivered papers on tax and other topical issues at various meetings, workshops, conferences, and in some international publications. She's also married to Mr. Adeola, a business intelligence expert, and you're blessed with 3 beautiful daughters. So you can see Aderonke is vastly knowledgeable in terms of taxation. And I know that this session that we'll be talking about deals with tax management. I would have loved to speak more, but in order for you to understand and feel the vibe of Mrs. Aderonke, not only is she a tax expert, for someone that has she's already a chartered accountant, she's already a chartered taxation individual, and she's also part of the CIM, an associate in CIM. You all know that you're all well in safe hands. And also she's happily married to a business intelligence expert. I'm focusing on the expert side because for you to have knowledge in business, it means you must have gained knowledge in different areas, in multiple businesses. When we're talking about FMCG, when we're talking about the finance industry, when we're talking about the banking industry, when we're talking about the health industry. So I'll be giving the floor over to Ms. Aderonke Oloruntoye. And I'd like to say thank you so much for joining us in this session and offering us this knowledgeable experience that you have gone through in between the period. Thank you so much, Aderonke. The floor is yours.
Good morning, everyone. Can you hear me?
Yes, please. Good morning.
Okay, yes, good morning. Because I didn't hear your response, so I don't like talking to myself. I always like to have feedback when I'm discussing. So it's a pleasure to be here this morning. Thank you to Pearl Mutual and also the Bridge Network for bringing me onto this platform. And I believe that the time we're going to have together today will be a profitable time for us. And we would all have learned one or two things even as we go on today. I don't know, is my slide going to be shared from your end?
No, I will make you a co-host. Okay. Make co-host. Yes, and now you should be able to share it on your side. Thank you.
Oh, okay. Okay, no problem about that thing. Okay, so let's just give it like 2 seconds. Let her do that. Then we can go ahead with the presentation.
You can go ahead, ma'am. I've already made you a co-host, so you should be able to share your screen now.
Oh, okay. All right. Thank you.
Okay.
I don't know. I know many of us have a little understanding about what taxation is all about, and some don't. So I would really like us, first of all, in the chat box, I would like those of us who are here, just give me what your understanding is about taxation. I just want to have a feel of what you know, first of all, before I continue. Sorry, that's my style. I want to have a feel of what we understand taxation to be. So can you just help me? Just give me a short description of what you probably think taxation is. I'm not seeing any response. Nobody knows what taxation is. Wow. Somebody says imposition of taxes on people or institution by the government. Okay. So that's one opinion. Can I have another? Please, this is going to be an interactive session. I don't want to be the only one talking here. So in as much as we may not be allowed to put on maybe our audio, I would like an interaction in the chat box as much as possible, please. Okay, if nobody is giving me any other suggestion, okay. Someone says it's basically fixed. There are amounts that are mandatory to be paid. Amounts to be paid, okay. Generated taxation is the process whereby government levies Collect levies from individuals and companies. Yes, money paid or levied as tax from income. Correct. I can see that we have a fairly good understanding of taxation. Good. So let's begin the main reason why we are here. There is this common saying by Franklin Benjamin, which was in 1789. He says, in this world, nothing can be certain except death and taxes. It's ironical, but it's almost true. We cannot really be certain about a lot of things, but anyhow you look at it, you have to die one day. And also you have to pay tax one way or the other, whether directly or indirectly. You have to pay tax. Sorry, I don't know. Okay, so the objective of this particular event is to familiarize participants with the legal framework for taxation in SMEs, to show us the statutory provisions that govern relevant tax authorities, and also to show us tax management strategies for SMEs, which is why we are here. We have already described what taxation is. So many of us have been able to describe what taxation is. And we have said taxation is a compulsory levy that is imposed on taxpayers, who can be either an individual or a legal entity, like many of us have rightly said, by the government organization in order to fund spending and various public expenditure. I'm sure many of us will say, we pay tax, we are not seeing what we are using it for and all that. That's a different discussion for another day. But for today, we'll be talking basically about what tax is supposed to be and what our expectations are, both of ourselves, especially of us by the government. That is what we'll be focusing on today. Now, let's talk about the regulatory framework for taxation. The Nigerian fiscal regime is based on statutes and practice. And these statutes and practices are supported by the Federal Inland Revenue Service of Nigeria. This Federal Inland Revenue Service has statutes and practices that govern it. And these statutes from time to time are always amended and updated. Amendments are always published in what is called the Financial Gazette of the appropriate tier of government. And this tier of government, we usually have 3 tiers of government. First of all, you have the federal, which is governed by the Federal Inland Revenue Service, which many of us are aware of. You have the state, which is governed by each state internal revenue service. And also we have the local government. These local government revenue services also collect a particular set of taxes. Everyone, whether you are an individual, you're a company, you're a citizen, foreigner in that country, whether you are a manufacturer, whether you are a marketer, an employee, whatever you are, even pensioners pay tax in one way or the other. And in this regard, we know that SMEs fall under any one of these categories. An SME could be owned by an individual, it could be a group of people who came together, marketers and whatever it is. So SMEs fall under any of these categories. And the administration of taxes, like I said before, in Nigeria is vested in the Federal Inland Revenue Service, which is the FIRS, and the State Board of internal revenue. In Nigeria, there are certain types of SMEs that we have, and these SMEs are taxable in Nigeria. Now, we have two basic types of companies in Nigeria, and these companies are limited liability companies or registered business names. Both of these kinds of businesses, like I've said here, are recognized and legal in Nigeria, and they are perfectly able to conduct business in Nigeria. But we're going to look at two intricacies, two things that are particularly of interest, even in these two different kind of companies that are registered and taxable in Nigeria. Now, limited liability companies, as we all know, or as the name also implies, limited liability companies in Nigeria are limited by share ownership. They are the companies that, so to say, have their shares sold out to people, a few particular set of people. These are different from public limited liability companies. Public limited liability companies are not considered as small, they are not considered as SMEs, but limited liability companies are considered as SMEs because they are limited by share ownership. And as soon as you register a company as a limited liability company in Nigeria, that company becomes liable to taxes. And being liable to taxes, you're either liable to direct taxes or indirect taxes. Now, let me sound a note of warning here for us. For those of us who probably have already registered limited liability companies in Nigeria, there are some things that we need to take note of. Sorry, I didn't put them here in this slide, but I just need us to take note of it. If you get your pen or whatever, just take note of this that I'm about to say. Now, if you have registered a limited liability company with the Corporate Affairs Commission in Nigeria, and you have opened a bank account in your company name, are we noting it? You have opened a bank account in your company name. Please do not use that account for personal transactions. If you have a limited liability company and you have opened a bank account in that company's name, never use it for your personal transactions. If you do, what is the risk? You run the risk of having tax issues with the FIRS, because FIRS believes that any money that comes into the bank account of a limited liability company is taxable. That is one thing you should note. Secondly, when FIRS discovers that such bank accounts, you know you have a BVN that is easy for them to trace. When FIRS discovers that such bank accounts have done such transactions, they will ask you to account for every kobo that comes into that account. And they will also ask you to present different and funny kinds of statements. They will be asking you for audited accounts, management accounts, cash book, and all those things, which you'll be expected to show, because they now want this as evidence that they will use, not let me say against you, but evidence they will use to calculate whatever value-added tax or withholding tax payments that you're supposed to have remitted to them and you have not remitted till date. Thirdly, if you claim that your company is not doing any business yet, a limited liability company that you registered in Nigeria, and you say it's not doing business yet, they will not believe you if you have started using that account to run your personal whatever. They will not believe you because they can obviously see transactions in your bank account. Sorry, I'm laying down all these principles, first of all, for us to note before we now go into the various taxes, so that you will now know the implication of some of these taxes that are being meted on SMEs. These are some of the risks that you tend to run foul of if you do not follow these instructions to the letter. So once you have made transactions in your account, they will assume that you already have inflows in your bank account. And then those transactions, they will now begin to compute your VAT on those transactions, and they will expect you to have done what you call withholding tax on those transactions. So this is something that we really need to be careful and wary of. So I want to advise, if you have a company that is registered and you have not started business, please, for your own sake, and for you to not to be unlawfully, so to say, taxed, it is better that you do not open an account in that company's name and begin to transact on it. Even if you have opened an account, just leave it. Make sure there is no transaction that is going in and out, except it is a business transaction that relates to your business. In that way, you will only have minimum tax to pay. That's almost no tax, if that is it. And then you will also be liable to pay only payee, which is the pay as you earn for your employees. And also, if you have registered a limited liability company and have not started business, please ensure that you also always file your zero returns with the FIRS. I will come to that later. If you want to do business in Nigeria for whatever reason, and you do not want any complications, so to say, then I suggest that you probably just register a business name and have that as what you use to do your business in Nigeria. Now, I think that is clear to all of us. Those are some of the things I want us to note with limited liability companies. Now, the types of taxes, I already mentioned here that taxes you are liable to, once you register a limited liability company in Nigeria, you are liable to pay direct and indirect taxes. What are the direct taxes that we have in Nigeria? Now, we need to know that each of these taxes, which are direct taxes, they are taxes borne indirectly. They are taxes borne directly, by the taxpayer's income. That is the income that goes to the person that is paying the tax. He is the one that pays this tax directly. And these are some of the taxes that are direct taxes for SMEs in particular. Now, I'm concentrating on SMEs. You have companies' income tax, you have education tax, you have withholding tax, the payee, you have petroleum profit tax, which, yes, it relates because there are some limited liability companies that actually are focused on oil and gas. So this is their own tax. You have capital gains tax. These are direct taxes on the taxpayer's income. Also, we have indirect taxes. These taxes are imposed directly, but are not borne by the taxpayer's income. It is not on your direct income. Consequently, these ones are upon the consumption of particular products or services enjoyed by the taxpayer. And these include value-added taxes, excise duties, stamp duties, custom duties, mining fees, and royalties. You will note that I just listed all these taxes. There are various guidelines and acts, regulations that follow and rule each one of these taxes. We'll not be able to go into details of each of these ones. I'm just going to give us an overview, because for each of these ones could even take us a whole day to understand what each of these taxes actually mean, or what are the requirements for each of these taxes. Now, like I said, there are two types of businesses in Nigeria: the limited liability companies and the registered business names. Now, the registered business name is the name your business operates under Nigeria, in Nigeria, just as it says. It helps you to conduct business in Nigeria, and you must register at minimum a business name to do business in Nigeria. Most taxes that are applicable to limited liability companies are also applicable to this kind of company. But the only difference is that they do not file company income taxes because they are not registered as a company. It's just registered as a business name to carry out business in Nigeria. However, these are some of the taxes that are affecting SMEs in Nigeria. Like I said, we have company income taxes. This relates to businesses that are registered as limited liability companies. And this has a tax rate of 30% of your taxable profit. Like I said, it has a lot of intricacies and things involved in calculating this taxable profit. It's not something we will be able to do in this session. Maybe another session will give us that. But just know that you need to, there are ways by which accountants or tax consultants try to calculate your taxable profit. And in calculating your taxable profit, they try to compare your allowances, so many allowances that you have, that would actually help you to claim some relief on your tax for you to be able to agree on your taxable income. So it is on that taxable income that 30% would now be calculated as your company income tax. Please remember that if you are doing registered business name, this tax does not apply to you. Recently, SMEs that have lower than 25 million turnover have been exempted from this tax. We have a financial act which was enacted in 2019 and amended in 2020 that actually supports this, that SMEs with lower than 25 million naira turnover are exempted from companies' income tax. Educational tax is also related to company income tax, and this one is 2% of your assessable profit in any particular year. Withholding tax relates to each company, whether it is the limited liability company or the registered business name. Withholding tax is the tax that is deducted when you are paying for a service that you enjoy from a vendor, from somebody. You withholding tax, just like it says, you withhold a certain portion of that person's payment, which you will now remit on behalf of that person to the applicable taxing authority, which could be the Federal Inland Revenue or your state inland revenue service. This is an advance payment of tax. And also when you do some jobs for other people, they also withhold this amount from your services. And later on, when you are filing your company income tax, you can now use this as a relief because you have already paid some tax before. So you can use it as a relief, which is deductible from your tax returns, your annual tax returns. It is deductible from your CIT. We also have pay as you earn. This is deductible from your employees. It is graduated in various rates, and the minimum is 5%, the maximum is 25%. You see, like I said, all these taxes have their ways of computation and their ways by which you break them down and you'll be able to arrive at a very, very conducive and favorable values for your client. So it's not something we can go in depth now, just give us an overall of all this. Then the capital gains tax, this is tax on when you sell an asset. You need to pay a 10% on that capital that you gain to the FIRS. Value-added tax, like we all know, is tax on goods and services, and it is 7.5% of the value. Now, I want to pay specific reference to the Finance Act of 2019, which was amended in 2020. Some pronouncements were made in relation to SMEs. It says companies who have less than 25 million annual turnover are no longer required to pay taxes. The following exemptions apply. If you have a company that has less than 25 million annual turnover in any year, this now applies to those companies. They are not liable for VAT registration, for VAT collection, for VAT remittance, and also for filing of VAT. They are not liable. But it now depends on that company. If you feel that you still want to do it, because the thing is that there are some organizations that will not do business with you if you do not have your VAT registration or your what we call your TIN registration, that's your tax identification number. And for you to get your tax identification number, you need to register for VAT, you need to register for CIT. But as it is, under the VAT Act now, it is not compulsory for companies who have less than 25 million to either file VAT or to even file their CIT. So there is an exemption for you if you have less than 25 million turnover in any particular year. But let me sound a note of 1 and 2 here. That for you to be able to claim this, you need to file your VAT returns annually before the deadline. Now, what do I mean by filing your VAT return, VAT CIT return? You need to file your annual tax returns every year. And this is done on or before the 30th of June of the successive year. For example, we're in 2021. You must have filed your tax returns for 20 up to December 2020 as at 30th of June 2021. So that means for you to be able to claim this relief of not paying CIT or being liable to file your VAT returns, you must actually file your CIT annual tax returns every year. Also, there is no tax education payable for this kind of companies. Registration for tax identification number is compulsory once a company commences business. This is particularly in relation to companies that are limited liability companies, LLC. You have to make sure that you have your tax identification number, and for you to have that, you have to be registered with the FIRS that is in your location. You look for the FIRS that is in your location and you file your annual tax returns with them. But for you to be able to do that, you need to register for tax identification number first of all. Now, companies may decide to register to collect and remit VAT. That we're still talking about companies that have less than 25 million annual tax, annual turnover. Whether you're a registered business name or a company with less than 25 million, I would advise that you still register for VAT so that your customers will not disqualify you from projects on the basis that you do not have a registered, you have not been registered for VAT. However, having said that, you are not liable to pay tax. So it is your choice, but it is advisable that you still do the registration. Now, we have talked a lot about limited liability companies, about registered business names. I will now want to specifically talk about companies' income taxes, because I believe that is what affects most SMEs. Many SMEs are actually already registered as limited liability companies. So I just want to look at this in a little more detail. Now, we have what is called the Companies Income Tax Act. And this act, requirements of Section 40 and Section 44 of this act says that registered companies must file the following with the FIRS every year. You have to do it every year, because if you do not do it every year, there are penalties and liabilities that are attached to it for you not filing your annual return. So every year while you are filing your returns, you must file a copy of your annual financial statement. I know all of us are conversant with it. We always have audited accounts every year. So your annual financial statement, that is what is going to be used to do your tax computation by your tax consultants or whoever it is that is doing the tax computation for you. And based on these financial statements, you have to now file your related tax computation. Also, a declaration by the directors, the principal officers of the company, that the tax have been completed and it is true and correct. Just like you have your audited financial statements where auditors would say that these accounts represent the true and fair position of the company, blah, 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 and they sign. Now, it is also a requirement by the FIRS that your tax consultant too must do the same, giving a statement that he has checked your tax computations and it is a fair and correct statement of your tax affairs. And also they have to put their seal and stamp. Now, that is the new rule. So just like auditors, tax accountants too or tax consultants too now have to put their seal on your tax computation before you file with the FRS. Now, the tax year with which the assessment, which you assessed, is from January to December of every year. So it is advisable also to have your annual tax return, your annual account to be from January to December of every year. This is taxation of limited liability companies that operate within Nigeria and its tax is on taxable profit. Yes, I've said this before, limited liability companies are taxable on their taxable profit. As you may know, a limited liability company has advantages over a business name. We have already highlighted some of the advantages. And the administration of this company income tax is vested in the Federal Inland Revenue Service. Please remember that if you are filing for your tax identification number, it should be at the FIRS office that is closest to your location. That is where your office or your business address is located. Now, let's talk specifically about some tax management for SMEs. Tax management, like we may know, refers to the process by which taxpayers arrange their affairs and businesses in such a way that they attract the lowest possible tax under the applicable tax laws. It is an act or a way of limiting the amount of tax payable without breaking the law. Tax planning or tax management does not mean we are breaking the law. What we are doing is only trying to use some of the allowances or some of the means that we have been given under the law to reduce the amount of tax that we are paying. In Nigeria, I know some people find ways of evading tax, but I personally, as a consultant, I do not advise my clients to do that. What I do is that I advise you based on the law. There are some parts of the law that we can actually take advantage of and file our tax return with minimal tax by reducing the tax. This totally is different from tax evasion. Tax evasion is a crime under the law, and once you do that, you will be liable to so many consequences, which I would not want to discuss here because I'm not interested in tax evasion, but rather I'm interested in us following the law and doing what is expected of us. Now, we have so many methods of tax management which tax consultants take advantage of. We need to be aware of some of this so that we also know that we have some advantages by following the law. Now, broadly speaking, we have what you call allowable expenses. We have some capital allowances which are given. We can take advantages of losses in previous years for the company. We can also take advantage of minimum tax. Early filing of tax returns could also give you what we call early filing bonuses. And we also have tax holidays that we can take advantage of. I just want to highlight some of these for us to be able to know that it is possible to get advantage of some of these allowances, which helps us to reduce our taxes. So tax management basically involves optimizing tax rates and taking advantages of these tools to minimize our company income tax. For example, we have our allowable expenses. In companies, we have what we call interest. Any sum payable by way of interest on any money borrowed or employed as capital in accruing the profit can be taken off as a tax relief. If you have borrowed money to run the business, you can take it as a tax relief. Interest is taken as tax relief on your taxes. You also have rent incurred. Rent incurred on your land, your buildings, or in respect of residential accommodation, or any amount over the employee's basic salary is deemed as not taxable for your tax purpose. It is not taxable. Also, if you have all expenses that are incurred in the repair of your premises, plants and machineries, your fixtures of your companies, whatever it is, all these are allowable under tax. You also have donations. Donations made to specific establishment. We have Schedule 5 of the company income tax, which specifies and has a list of approved companies or approved organizations. So if you've made a donation to any of these organizations, then you are deemed to be, the taxes are deemed to be deductible. A company can make donations in excess of 10%, cannot make donations in excess of 10% of its total profit. So we can take advantage. This is another tax relief that you can use for management of your tax. If you have made donations to organizations that are approved under Schedule 5 of the company income tax, you can go as much as 10% of your total profit to claim it as a tax relief. And if you also have subscriptions for organizations, this is why you discover that some organizations say that their staff should present, for example, if you are a member of ICANN now, you can, if your company is willing, you can actually ask them to pay your professional fees, which is for your ICANN dues or CITN dues or whatever your professional body is that is approved. Your company can actually pay it on your behalf, and for benefit for the company can now use that to also reduce their taxes. So if you're a limited liability company and you want to try and reduce your tax, these are some of the ways by which you can. You can just get all those professionals in your company, pay for their tax, their professional fees, and then use that also to reduce your tax. Yeah, I'm teaching you some of the tricks that consultants use so that at least you'll be able to know how we do some of these things. We also have what we call capital allowance claim. This is under the law, is allowable. There are major categories of qualifying capital expenditure under the law. You have plants, you have machineries, furniture and fittings, equipment, buildings, research and development expenditure. There are various rates applicable to each one of these qualifying capital expenditure. It's not a flat rate, so it depends on which of these capital expenditure that you have in your company that you want to use. We can now use capital allowances to also reduce the taxes that you pay on this. And in relation to this, we have what is called capital allowances are also divided into three different categories. You have what is called the initial allowances. These allowances are granted only in the first year that you buy an asset. For example, if you bought a plant and machinery, initial allowance is applicable only in the first year of buying that asset. So subsequently, you now have what is called annual allowances. So these allowances will now be divided. Maybe if, for example, you have plant and machineries which will last for 10 years, you have an initial allowance on that asset. Then for the remaining 9 years, there will now be annual allowances on it, which is only claimable in equal proportion for those 9 remaining years. It says it's applied on a straight line method in the basis period of which the assets have been used. So we also have investment allowances. This is a tax incentive that is granted only on plant expenditure to certain businesses. It's not applicable to everyone. We also have losses. You know that every year is not guaranteed that a company will make a profit. So there are some years where you make losses. Not all companies make profit annually, especially in the early years of commencement of business. So this is recognized under the law. So you can claim losses even on the tax that you are filing for your company. You can claim your losses on it. Such can only be carried forward. You cannot carry it backward. You cannot say, okay, let's assume you started a company in 2020 and then you now made a loss. No, you started a company in, say, 2029. That makes it clear. 2019. That makes it clear. 2019, you had a company, you made a loss. In 2020, you made a loss. You now decided to start filing your returns in 2020. You cannot carry your losses back to 2019. You can only carry it forward to 2021. That's what we are trying to say. That you can carry forward losses, but you cannot carry it backwards. And it's only for a maximum of 4 years. Let's say, for example, in 2020, a company made a loss of 100 million in 2020. You can carry forward this loss to 2021. If in 2021, you still made an additional, you still didn't make profit, you can carry this loss of 100 million into 2020. If you still have a loss of about 50 million at the end of the day, these losses can be carried over for the next 4 years. But once it gets to the 4th year, whatever losses that you have incurred up to that time that has not been carried forward becomes null and void, and it lapses. The Finance Act of 2019 gives a tax incentive for small businesses with turnover less than 25 million to pay taxes at 0% for CIT and VAT. I've already explained this before. However, even as much as that applies, minimum taxes could be imposed on a company if it has no taxable profit or total profit, or where the tax on the taxable profit is less than the minimum tax. We always calculate, okay, yeah, that's another thing I need to say. We always calculate minimum tax, even after you have computed your company income tax. We have what is called minimum tax calculation. So we always calculate this minimum tax. If when your consultant is now comparing your minimum tax with your company income tax for that year, if it happens that your minimum tax payable is higher than your company income tax, then you are liable to pay that minimum tax for the company. So please also take note of that, because some consultants do not actually consider that, but it's very important that you always compute your minimum tax payable. But in a situation where you now have your minimum tax lower than your company income tax, you still be liable to paying that company income tax, because the regulatory authorities will always prefer to choose that which is higher. Unfortunately, that is not to your own benefit. We also have some other strategies that we use. I've mentioned interest before. Interest can be used to reduce your taxes. You have dividends, you have royalty, rent derived from outside Nigeria and brought into the country. These are some of the ways by which we channel tax exemption. If you have income, interest, dividends from abroad, and you bring them into Nigeria, since the income was not derived from Nigeria, they are exempt from tax. That is why we say taxes that are liable to company income tax are those that originated, that are received in Nigeria, that it's income from Nigeria. And you have interest on foreign currency domiciliary accounts. Those ones are also exempt from tax. You have bonuses for early filing, like I said before. If you file your returns earlier than 30th of June of every year, the Federal Inland Revenue Service is under obligation to give you 1% of that tax that you have been the taxes that have been calculated to be paid. Now you also have income tax holiday for companies with less than 100 million turnover, but this is only applicable to companies that are in the agricultural sector. Companies that are in the agricultural sector that have turnover less than 100 million are also exempt from tax. Other SME taxes, we have business premises levy. This is paid once a year, and it is a minimum of 5,000 payable. So it depends on where your business is or what kind of business you have. There's a law that guides that too. You pay a minimum of 5,000, and it is payable per state, per branch. For example, banks, they have branches in every state, and even in every state, they have branches in various places, like there's GT in Surulere, in BI, and all that. Each of the branches will pay this levy every year. They have to pay it. It is the law. Capital gains tax, this is 10% only on profits from sales of chargeable income, such as fixed assets. If you make a profit on selling off your fixed asset, your motor vehicle, land, building, and foreign currencies. We also have in Lagos State what is called the hotel and consumption tax, which is 5% on sales only for restaurants, hotels, party planners, and all those cinemas and event centers. Stamp duties are also applicable. It is advisable for us to get tax clearance certificate, because many of our customers, when we want to do, we want to transact business with them, they also do not want to run foul of the law. So they always demand for your tax clearance certificate. So tax clearance certificates, we call them TCCs. They're obtainable from the Federal Inland Revenue Service, where you file your tax return. And they are required by customers to give their companies, they are required by customers to give their companies the project they handle for them. So to get this TCC, your taxes need to be up to date. We advise that you get qualified and experienced tax consultants and advisors to help you to plan your taxes well and to minimize your tax exposure. On a final note, please, I would like to say, do not be caught on the wrong side of the law because you will not like it yourself. It is better to be safe than to be sorry. I want to thank you all for having listened. I would like to know if anyone has questions, clarifications, additions, whatever it is that you have, please let me know so that I'll be able to attend to this. Thank you.
Yes, I see here a question about whether there will be access to the slides. Yes, everybody who registered for the session will receive access to the slides as well as the recording for this video. We are recording, so everyone will receive the video. At the moment, is there anybody else who has questions that they would like to ask?
I raised my hand, but
yes,
I
Mr. David, you can go ahead.
Yeah, sorry, I have a little bit of construction at the background, but my question is with regards to the filing and the returns. So,
Okay.
and also two questions on the issue of you doing business outside, like for instance, Nigerian banks that are doing business outside, making profit. For instance, in 2019 to 2020, UBA determined to make a profit of 3 billion with the subsidiaries outside of Nigeria. So I was wondering if those ones will be taxed when they bring in the money into Nigeria. That's a huge sum outside of Nigeria. Then the other thing is, what is the role of technology today with regards to filing of taxes? And
thank you very much. I forgot that.
Also the records, the keeping of tax records. So I'm into tax collection, and we've designed a system that collects tax with local councils or local governments, as you say. And that means we collect tax from everybody because businesses in the local government and also people and housing tax as well. So what is the role of technology in aiding SMEs to meet those tax return demands, and also the role of consultants leveraging technology as well to advise SMEs? Thank you.
So do I take the questions one after each other, or I should just take all the questions first?
I think you can answer the questions one after the other.
Okay, no problem.
I think just,
right.
yes.
Okay, so let me answer your question, Mr. David. You asked about technology. I actually forgot to mention something about that. We all know that technology has a lot of role to play in businesses these days. As a result of that, the Federal Inland Revenue Service and even the State Board of Internal Revenue, particularly, I'll talk about my location, which is Lagos. That's the Lagos Internal Revenue Service, have been able to come up with filing returns electronically. So now we don't need to physically go to Lagos State Board of Internal Revenue or even the FIRs anymore to file returns. It makes our work, our job easier, even as consultants, even as companies, you on your own can actually go online, do all your registration online, get everything you need online. It's there now, it's possible. We can do all that. Even filing of return, getting your TCC2 is now done online. You don't need to go there physically. As long as all your records have been updated with them and it is correct and complete, it can all be done online. So really, I have forgotten about that, but I needed to mention it. Yes, all has been done online now. So even for us tax consultants, it makes our work a bit more easy. All we just need to do is to advise on what to do. Everything is being done online now. You don't need to go to any physical office like we needed to. I've even been in sessions recently where when they need to do, I don't know how many of you are conversant in tax audit meetings. They do tax audit meetings online now, via Zoom. We do it. So it's made our life a bit easy. Now, people are already taking advantage of that, and it is making people now even to be more compliant with doing their tax return. You also had the question about companies bringing in income from abroad. Yes, that's what the law says. That if you have income or interest coming from abroad, there's nothing, it's not taxable. So for those companies, banks that are doing that well, unfortunately, they are taking advantage of the law. So there's nothing we can do about it. So even if they are bringing in trillions of money coming from abroad, as the law says, it is not taxable, so they are free. So I don't know if I've answered your question.
Yes, ma'am, you answered the two questions. The third one was how can SMEs position in terms of records? You know, the tax law, there's the income tax law, it talks about records. Some countries, it's about 6 years. You have to keep that record for 6 years. So in case they come back, so now there are technologies that you can deploy as an SME to record daily sales and record all your expenses integrated into your QuickBooks and all the rest. And you keep that record, but also use that now to automatically file, your tax from those digital records. How are tax consultants advising SMEs to take advantage of such technology?
Definitely the same way they do their tax filing. Since you already have your records automated, so it makes it a bit easy for everybody. Your records are already automated. Whenever they ask for such information, the FIRS or whatever, you're able to pull them out from your system and be able to send it to them without any stress. Because what used to happen is that both the tax consultant, both the FIRS, they will need to visit your offices physically to get all those documents. But if you already have them on, so to say, in quote, soft copies and all that, all you just need to do is to extract those data, pull them up, and update it on their website. It's that easy now. They do that now. So even tax audit and tax investigation are easier to do now based on these facts.
Thank you, ma'am.
You're welcome.
Yes, I see another hand up, an OJS. Yes. If that person could please unmute and ask their question. Thank you.
Okay, good morning, madam. Thank you for the presentation. Okay, so I have a question for you. I run a consultancy outfit, and we have a JV with a similar company. So what happens is that when they secure contracts, then they subcontract to us.
Okay.
And then, so the primary company will pay tax. So what is our own position supposed to be? Because, for example, we have a project that is, let's say, 40 million naira, and then they've taken out VAT on the contract, and then withholding tax, and then they now subcontract to us. Is the law now saying that we now have to pay another tax on that project? That's the clarification I need from you.
We need to know what the agreement or the whatever contract clause between you and that company. So I will first of all want to know what the contract is between. You say you're a subcontractor. What exactly are the terms of reference, because I cannot just give you a blanket advice just like that. We need to look at what the contract says between the two of you, first of all. But from what you have said, subcontractors, are you registered as a business name or a limited liability company? This is another issue. So those are some of the things.
Yes, we are registered as a limited liability company.
Exactly. So you are liable to VAT and CIT too, because you're a limited liability company. That's why I said limited liability companies have a lot of exposure that normally in Nigeria, many of us do not understand. So because you're already a limited liability company, you're already exposed to pay VAT, CIT, and all those other taxes. The only benefits you probably have is that your company has already, maybe the principal company has already paid maybe CIT, has already paid VAT on the transaction you are conducting. So you could probably claim that as a VAT output in your own case. That's the only thing. But you are still liable to pay VAT or to register for VAT. And like I said, the only reason why you probably might not be liable to that if your turnover is less than 25 million, as we have already highlighted.
Okay, thank you so much.
Thank you, sir. I can see some
questions. Thank you. Yes, there are some questions in the chat. So what I can do is that I will read them out. Okay, so the first question is from Aderonke Oloruntoye. Does a company that was registered in 2018 but hasn't started business need to pay tax? If not, what can be done?
Good. You started business in 2018. So I also have some questions for you. If you have not started business, has there been any transactions on do you have a bank account? Is there any transaction there? If the answer is no, you are not liable to pay tax. What you are liable to do is to file your company's income tax. You have to file your annual company's income tax, especially if you are a limited liability company. If it's a limited liability company, even though you have not started business, you need to file your annual returns, because that is the only, if you are not filing your annual returns now, when you now actually want to start business, or you actually start business, the FIRS will go back to 2018 and then begin to compute what we call late returns of filing. So you are going to be liable to pay late returns filing. So right now, to advise you, you haven't gone so far, started in 2019, you have to file your returns for 2019, for 2020, and probably next year you file for 2021. So you have 2 years outstanding that you have not filed. You do not pay any tax. You are not liable to pay tax since you have not started your business, but you are liable to file your CIT, your annual tax returns, if you are a limited liability company. But if you are not a limited liability company, you are not liable to even file this tax return. Next question, please.
Okay, so just a clarification on my end. If he does file, he's not going to have to pay anything. He just has to file.
He's not paying any tax, because he's going to have to come up with your annual financial statements. And the annual financial statements too will show that you don't have any income coming in. You don't have any income. If you are not showing any income, there is no business being done, but you have to still file your tax. If it's a limited liability company, you still have to file your annual returns. You are liable to do that, just to show that your business has not started. So when you eventually start business, you already have a what do you call it? There's already details about your company with them, and it shows that you have not started business. But if you have not done that up to now, when you eventually want to start business, they will now tell you to pay what is called late filing returns and penalties, and they will add interest, which at the end of the day may be too much for you to there as an SME starting off. So I usually advise SMEs, if you are a limited liability company, even though you have not started business, please file your company's income annual tax returns every year. Make it a point of duty. Let it just be there. Your records are there that you have not started business. So when you eventually start business, you start on a clean slate.
Thank you so much. There's another question here from Uloma. Thank you for your session. There are ongoing issues on VAT remittance at the moment, specifically in Lagos and Rivers. What is your advice?
I actually was waiting for that question. I'm praying that nobody will remember. Anyway, my comment on this, from inception, VAT has always been for FIRS. FIRS has been the one that has always collected VAT. And when you come to issues of legality, we should be very careful in following what the law says. So far, there have been issues, Lagos and Rivers are still contesting it. So to be on the safer side, and just like the court ruling that was given, it said let status quo remain. So my advice to clients for now, to allow status quo to remain means continue your filing with FIRS until this issue is totally laid out black and white. Right now, I don't even know what color to call it, whether yellow or green or whatever. It's not in black and white. So for now, let status quo remain. Let everyone continue to file their VAT returns with FIRS. That's what the law says. So until we have, what will I say, a cogent law, that is a cogent law or guideline that is backed by law and act, let us remain where we are. Status quo say FIRS should collect VAT. Thank you. Next question.
Okay, yes. Rita asked, is there a limit for SMEs who have turnovers less than 25 million? Because some people might like to understate profits to access those exemptions. So what's often done about those in those situations?
Let me sound a note of warning. We are not talking about profit here. We are talking about turnover. I've seen a lot of clients making that mistake, even since the pronouncement. We are talking about turnover, not your profits. If your turnover is less than 25 million, yes, you are allowed. We are not talking about profits because a lot of people have been confused. After you have taxable profit and everything, they will say, my profit is less than 25. We are talking about turnover, which is your sales. There is no way you can falsify your sales now because definitely there will be evidences from your bank statements. You received this amount from so-so clients. You received this amount for so-so service. You received this amount for so-so. So your bank statements cannot lie. Even if you falsify your accounts. I'm an accountant, so I know what I'm talking about. Even if you try to falsify your annual financial statements, will your bank statements lie about what you have received? And it is obviously there what you have received. And for auditors too, they will go through that, they see what you have received as your turnover. So yes, we have seen situations of people trying to falsify and understate this, but you cannot understate your turnover. That's why I think the law itself or the act itself was very, very strategic and decisive about their use of words. It is not profit, it is your turnover. So it is your turnover we are considering, not your profit. So there's no way you can understate your turnover. Your bank statement is there to show what you have actually received. So it is very difficult to do that. So I want to advise that unless you can prove otherwise, that what you received from your clients or your vendors or your customers is not what is in your bank statement, then there is no way you can actually falsify your turnover being less than 25 million.
Okay, thank you. Temitope in the comments also asks, Ma, if someone starts a business and after 2 years puts a stop to the business, will he still pay for the 2 years that transactions have taken place?
Once you start a business, I keep saying it, especially if it is a limited liability company, you're already liable to tax. So if you do business for those 2 years, you are liable to pay tax for those 2 years. Even if after those 2 years, you are not doing the business again, the best thing you can do is to go and declare to the FIRS that you have stopped business on that particular, you have stopped business on that particular company name or business name. That's the only thing you can do. And once you have done that, you know you also are liable to go to CAC and apply for cessation of business on that company name. So that is the only way you can deal with that. Once you have started a business and you have started making income and it's a limited liability company, you are liable to pay tax. But if business is stopping, what you can also do is to write to the FIRS and tell them that though you have been conducting business on this business ceases to exist. And if that is the case, you also have to involve the CAC, which is the Corporate Affairs Commission, in filing cessation of business with them. Thank you.
Thank you so very much. At this